So incredibly difficult and challenging day to day. We had worse results in our live trading because we had 3 TradeStation platform crashes, minus 9,600 and the 200K, minus 3,000 in the 50K. This number right here was, if we break this down, 50K is now including this micro portfolio. So the micro portfolio without slippage and commission, I say without slippage and commission is because I'm summing up all these daily P&Ls and I realized I don't have the slippage and commission in here. So without slippage and commission, the sum of these daily P&Ls are minus 1302, and the sum of the slippage and commission in the 50K portfolio is minus 390. Crude oil was the main highlight of the day, but the stock market is just extremely volatile. 9th loser in a row on Cobra 3. And so I will have the portfolio calculator updated for today's trades, but it's over $1,000 of difference here, and more than $1,000 in the 200K portfolio. On issues related to TradeStation crashing, I don't know why it crashed. I have added this micro NQ20 workspace with 20 additional charts, but that ran well yesterday. And today we had 3 crashes. So I don't know if it's related to the extra charts or something else, but Fed tomorrow, I want to address what to do right now in this market volatility. We have the micro NQ portfolio, which was down today, but the micro NQ20 portfolio, I want to show you this, 20 strategies. This worked well during the pandemic. So here is what the portfolio calculator looks like going back to mid-2016. It doesn't work before mid-2016. It has a $4,000 drawdown, trading 20 strategies on 1 micro. What did it do during the pandemic? It did well during the pandemic. We were at volatility levels during the pandemic. We are up on the month, 47.73 coming into today, down about 1,500 today. So 3,200, still up 3,200 on the month, and then down today. It's about 2,000 out of a $4,000 drawdown on these 20 strategies. And so you can see how it's done. It did 39K in 2020, 33K. These are hypotheticals with existing strategies and only 3 new. So I'm not optimizing a bunch of strategies. I'm adding existing strategies that we've been trading in the Nasdaq, which has been our strength. And this is what I'm recommending. If you trade the 50K, I would trade 1 unit of this. 30K is what I am moving the 50K portfolio to, is 1 unit, trading the micro. And then if you have profits, you can add another unit. If you have additional profits, you can add another unit. But your risk from here, after today's results, is another $2,000. If volatility goes higher than it is now, I would just recommend stop trading. Stop trading if volatility is higher than it is right now. And so if you have the 200K portfolio, we're going to trade 2 units of this and risk another 4K total, 2K per unit. So we're going to trade 2 units. This makes 60 grand. The last 2 years, at least 33 and 39, so 2 times that. That's still a good return on a 200K account. A 200K account is becoming very small in this market environment. So I highly recommend scaling back in this volatility because the market environment is just very challenging right now. And if we get higher volatility, I'm going to stop for a while. And if we get to current volatility, I'm going to stay with this. I'm going to work on compounding this. You could compound this to, if you start with 2 units and you're up, 15K or 30K in profits, you could add another unit and you could get 100K on the year. You could get 120K on the year if you compound to 3 or 4 units. And so it gives you the way to, micros give you a way to reduce your risk and then trade it on a compounded basis. So 50K recommendation is to trade 1 unit of this. 200K recommendation is to trade 2 units of this. And the current drawdown, this is as of yesterday. After today, the drawdown is about 2,000. So we're risking another $2,000. Good entry point to trade the micro NQ on this setup. So let's continue to look at the trades today. Really harsh market environment. EVP1 was, let's look at this here. EVP1 just got stopped out that high. Every time we get short, the market seems to stop, run up with excitement until we hit our stop and then rolls over. Same thing here. Stop, reverse, get long. This is the last 5-minute bar of the day. That's 150 points on the Nasdaq. That's $3,000. That's a $3,000 per contract move. So just to give you an idea of how extreme the nature of this is actually not the last This is the 5 minutes after the stock market closes. So 150 point range on this, and about $3,000 per contract on the regular E-mini contract versus the micro. So VSD, I had a lot of trades today. Let's look at that. Got this short originally, then kind of chopped up during the day. See how we're shorting it, how our shorts look like this. We get short, it comes up here. We get short, it comes up here. It would have gotten stopped out anyway because it does this. Just all this propping up, excessive propping up. Yesterday we were propped up, today we're propped up, and then we finally get this move in the last hour. This is on Central Standard Time. The last hour before the stock market closes, this sells off from 14,400 down to 14,100 range, 100 area, 14,150, 250 points, and then another 250 or so after the stock market closed. The futures are open, another 250 points. So market sells off another 500 points in the last 2 hours, one of those being during the stock market and one of those being in the after hours of the stock market. So just a crazy extreme volatility and range. It looks like the market's going to move higher here. I want to show you that on the volume chart. So here is the volume sum day. We talked about how the Nasdaq rallied as selling pressure increased into the close yesterday, and how this was a fake rally. It was a very choppy downtrend. The market kept trying to pull off yesterday's action again. It looked right here when the volume went positive, blue for the day, and blue here. It looked like it would take out those closing values from yesterday, and then it just rolled over. Such a big head fake. It's very hard to get a direction with volatility that's this wide ranging in the market. You see the price movement indicator that I talked about. This tells you the sum of the ranges during the day, almost $500,000 ranges, and we saw that during the pandemic. That's how we're measuring our price movement comparisons in the pandemic. We're seeing that. So those are some indicators we talked about yesterday. Once again, these are all the Nasdaq strategies, down about $1,300 and down in a $2,000 drawdown. But this setup does work well, has worked well in the past, doesn't mean it will work in the future. We could get more volatility. We could get flash crashes. If we start to get flash crashes or increased volatility, I would just stop trading right now. It's very hard to have a system to trade a flash crash. And so that's the 50K and micro NQ. First 2 days this week, our 50K include the results for this 10 strategy setup and the micro NQ. Going forward, it will be one micro NQ. So tomorrow we will start trading one micro NQ for the 50K portfolio recommendation. The 200K portfolio, here are the results for today. You see one SR counter trend hitting its profit target, another SR counter trend getting stopped out near the high. The market is going down, but it's such a choppy down pattern, it's hard to be profitable. Gap continuation in reverse. Here's one strategy that we got. We missed the winners on the platform outage, and we captured the loser when it came back up. So that was frustrating, considering this has been a more challenging strategy. You see the price movement here. This chart only goes to 315. It doesn't show the last 45 minutes. So the market is down here at 43. It's at 43.35. It says that's the .D symbol. So we'll look at the 24-hour session. We saw gap continue. That's gap continuous. Tick pullback was down. Tick wave was down. The longs and the shorts were getting stopped out. Cobra 3, $600 stop loss is just a blip on the screen for the 9th lose in a row. Surprisingly, 60-minute breakout captured this long trade. There was enough of an up move for that. 60-minute breakout short stopped out here. Here's another example. I thought we would have a good trade going into the close. We got short, and just this extra energy as the market moved higher, hit our stop, and then rolled over. Got short again and short overnight. I'm going to cover that short, and I'm going to trade 2 micro NQ setups for the 200K portfolio instead of what we're doing right now. Night trader VSD minus 6,100 on 4 contracts. It was stopped out as well. show you that. Stopped out right here, then the market rallied. Stopped out the low. We're getting these constant stop outs at the pivot points. Nasdaq, we went over that. We saw how this EVP got chopped up here at the end of the day with all the volatility and $3,000 5-minute bar ranges, gap continuation, stopped out. It would have been, you would have had to have a massive $8,000 stop loss or more before it rolled over $10,000 from its high per contract, and then tick pullback. You just got caught up in the volatility here. Cobra 3, SR counter trend 2 had a small profit here. It looks like a scalp. QS3 lost, just stopped down at the low swing on that before it moved higher and would have hit the profit target. Gold, we see here gold is hit its profit target on this strategy. Gold reversal hit its profit target, reversed to the short, moved higher till it hit our stop, and then reversed again. So it's just a stop running type market environment, and down on the day for that. And then you see we're long here, and a few points higher. If this were to move a few points higher, this would have hit its profit target. So we were flat. We were long 2, sold one here, and then sold another one here till we're flat, and then we got long here when this was stopped out. And then instead of moving a few points higher to hit the profit target on this, it's sold off. So choppy there on gold. Silver, no trades. Copper, no trades. Crude oil, this was the highlight of the day, capturing over $1 per barrel in Cobra Crude conservative and Cobra Crude aggressive. And so natural gas, and then soybeans. Soybeans down today. Our platform crashed here, and we got out at a worse price up here for soybeans, day trader 3, and then both of these lost on the day. So I am transitioning to this micro NQ portfolio right now. 1 contract on the 50K, 2 contracts on the 200K. The risk is 2K per unit, and just this volatility is extreme. If it increases, I'm going to recommend pausing trading right now. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.